The aim of auditing, you need to appreciate the aim of auditing. So the main aim of an audit is to enable you as an auditor to obtain sufficient, appropriate audit evidence. So sufficient actually means quantity. So you should get as much evidence as you can. While appropriateness means quality. So you should get quality evidence, again, which is enough. At this level, we don't go to my basic auditing. What are the duties of an auditor? We don't do that. We go straight to the planning stage. Now, at this level, we are going to assume you are the audit partner or audit manager. So you are in a higher level. Sometimes, maybe the worst case scenario can be an audit senior. Okay, so the audit process. Let's look at an overview of audit process. The audit process into 7 steps. It is trying to join. Welcome, Spondi.
Thank you, Mr. Pando.
Okay. Alright, so we are just starting. We have just we started with looking at what is the purpose of an audit. So it's to gather sufficient, appropriate evidence.
Okay.
So in auditing, we follow 7 steps. Alright. The first step is client acceptance or establishing engagement terms. So you have to accept the client. You have to look at the identity, the type of business. You also need to assess ethical issues. That's the first thing, client acceptance. Then the second approach, you establish.
Has Chifundo joined?
You're saying what?
Chifundo, has he joined?
Yes, he has joined.
Yeah, man.
Oh, I can't see. Okay, I've seen him now.
Okay, then the second
Proceed.
approach, we establish materiality and assess risks. So we need to look at what is the materiality level. Materiality actually means what amount is significant for auditing, and we also need to assess risks. Risk which will lead us to provide a long opinion. Then after that, we are going to plan and design the audit approach. So here we're talking about gathering audit evidence. Then we have to audit internal controls. Then after we audit internal controls, we have to test for evidence. After we test for evidence, we complete the audit and evaluate the results. Then finally, we issue audit report. So that's what we'll be doing throughout this text. But our interest is on audit planning. So the first thing, let's appreciate what is an audit strategy and an audit plan. Why are the two different? So in auditing, the first thing is an audit strategy. So an audit strategy is like a summary of what you are going to do in auditing, or a summary of how you are going to plan the audit. So you summarize your scope. Maybe you are going to audit for 6 months. That's the scope. Then timing. Okay, so a scope can mean which areas are you going to audit. So maybe we audit the financial statements, we audit cash, bank, and so on. So you just summarize what you're going to audit. Then timing, how long are you going to audit? Then the direction of the audit. Here it will involve assigning staff, it will involve who will be the senior auditor, who will be reviewing, and so on. And then this audit strategy will avoid the said that it guides the development of a more detailed plan. So what is an audit plan? So audit plan, we can say, is the expanded audit strategy. So it will convert the audit strategy into a more detailed plan. So in audit plan, what we are going to do is this. We look at the nature of the audit. So maybe the audit will be interim or final. Then we look at timing, how long we're going to conduct the audit. Then the extent of procedures that we're going to perform, maybe inquiry, inspection. So based on experience of the audit staff. So junior staff maybe will be involved in stock taking. Senior staff will be auditing cash. Then the partner will be reviewing accounts. That's what we mean by performance by engagement team members. So whilst you're carrying out your audit plan, you are going to aim to obtain sufficient and appropriate audit evidence so that you reduce audit risk to an acceptable low level. Remember, you're at the planning stage, you want to start auditing. So to ensure you get the right opinion, you're supposed to plan your audit. Okay, so now let's look at audit planning in detail. That's what we're going to start now. So in audit planning, we are going to decide in advance how our audit will be conducted to that engagement. In simple terms, when we decide how our audit is going to be conducted, we'll be focusing on performing in an efficient and effective manner. So we will ensure that we're hiring the right staff, we ensure that we have understood the entity thoroughly, we ensure that we have understood the controls, and we understand the business risks. So audit planning is covered under ISA 300. So ISA 300 planning is not a one-off event. What we mean is that audit planning, it will be continual and it will continue throughout the audit. And it will be iterative. Iterative means you will be changing now and again. You can maybe say we are going to have 3 staff. After you see the nature of work, you can add 2 more staff. So it will be changing now and again. So it's very important. In practical, if you are auditing a client, what you need to do as an audit senior is you need to understand the company's business. What business are they doing? You need to understand the risks associated with that business. You need to understand its systems, maybe the accounting systems that they're using. You need to understand the deadlines, and you should understand the problem areas before you begin the field work. If you do this, it will ensure that your team or your audit staff can focus on areas most likely to contain material misstatements. So in general, when you look at these things, you'll be able to identify material misstatements. So in summary, audit planning is going to involve the following. We are going to look at the nature, timing, and extent of risk assessment procedures. So how are we going to assess this? How are we going to identify audit risks and business risks? Then what audit procedures are we going to carry out? Maybe inquiry, inspections. How much work should be done? So are we going to do sampling? Or are we going to conduct the whole work? Then, when the work should be done, will it be interim or final? Interim is an audit which is carried out on a periodic basis, maybe every month, every 3 months. Or is it be final audit which should be carried out once? Then any other procedures necessary to conform to ISA. So we carry out other procedures. For example, confirmation from the bank, or maybe data segregation. Those are some of the procedures that you can carry out. So now, before we start the actual audit planning, you should understand, as an auditor, there are 5 approaches which we use. We have the risk-based approach. In this based approach, as an auditor, you approach your audit based on the risk that you have found. So once you have found the risk, you come up with the procedures to address those risks. Control-based approach, you assess the controls of the company. If they are weak, you carry out more work. If they are strong, you carry out less work. Then analytical-based audit, that's where you calculate ratios and see which ratios show deviations. For example, current ratio has decreased by 3 times, or gross profit has decreased by 20%. Then balance sheet approach, that's where you focus on only statement of financial position items, assets, liabilities. Or sometimes you can focus on the income statement figures only, gross profit, profit before tax, revenue. Finally, we have got directional testing. So directional testing is where you focus on areas which seem to be crucial to the audit. So we'll look at this one later. Of course, at your level, it's not accepted. It's not practice, but you just have to appreciate that it's a type of audit. But here in this topic, we'll be interested with the first three: list-based, control-based, and analytical. Balance sheet or income-based will be used in conjunction or in combination with those three. Now let's start audit planning. So in audit planning, what are we going to do? In audit planning, the first thing will be preliminary engagement activities. So first of all, you go out and understand your client, not in terms of their risks and the rest, but you just have to look at what did the previous auditors did, and also issue an engagement letter and make an agreement. And also you can agree on the conditions of an audit. Secondly, you go out to the field and understand the end environment. So before you start auditing, it's important for your staff to go and understand the entity that you are auditing. Then you come up with the overall strategy. Then you have to set materiality level. You have to perform risk assessment. You have to have an audit program cycle. You have to gather relevant information. You have to decide the audit response. You have to consider IT controls. Then you have to allocate teams and supervise them. Then you have to update for changes during the audit. Then finally you have to document. So we'll be looking at those issues. But today I think we'll look at only 3 stages. When we meet on Thursday, we can finish the other stages. So this is the longest topic. I think in the book it's closer to 60 pages, something like that. So preliminary engagement activities. This is the first step in audit planning. So when you're carrying out this stage, it will help you as a firm to decide whether you have to accept or continue with the client, and whether your audit can be done properly. So looking at the nature of your client, you can decide whether you can conduct your audit properly or not. So that's the first thing. Now in preliminary engagement activities, these are the activities that we conduct. There are 10 activities. The first thing, you have to check whether the client should be accepted or continued. So maybe you look at the nature of the entity. Maybe it might be very complicated entity. Or maybe assuming you are going to audit a company which does not have an accountant, where are you going to start from as an auditor? Then you can decline. Then you look at the integrity of management. So are these people are they honest, for instance? Are they qualified? Then thirdly, you look at independence, you confirm independence and identify any conflict of interest. You as an auditor, are you going to be independent? Is your judgment going to be influenced? Or is your independence in breach? Maybe you have a brother who's working as an accountant, or the CEO is also the audit partner. You consider all those issues. Then you make sure your firm has enough competence and resources. So do you have the right staff who are qualified? Do you have resources, money for maybe allowances to your staff? Are you going to manage those? Because sometimes the client cannot pay you right away, so you need some resources. Also, you need to communicate with the previous auditor if there is one. So you need to communicate with them to say, why have we left? Should we continue working with this and should we accept or not? Then confirm the preconditions of an audit. Preconditions of an audit include: 1, we have prepared financial statements in accordance with accounting standards. Number 2, management accepts its responsibility. So make sure these preconditions of an audit exist. Consider any scope limitations. Are you limited in scope? Are you restricted in certain areas to gather evidence? Maybe you are not allowed to visit the stores. Then you need to document the decision to accept or continue. Having looked at those 7 issues, you can make a decision whether to accept or continue. Then if you accept, you can now issue and agree the engagement letter. So you draft an engagement letter. Then finally, you assign the right audit team. Okay, so that's the steps of preliminary engagement.